Hey, it's Dave Knight here from 123daytrade.com. Thanks for watching. Thanks again for being here. Today, I want to talk about my CLPORT strategy, not to be confused with the CLPIT strategy. They sound kind of alike, but this is a CLPORT strategy. You know, what it stands for is crude oil power opening range trade or open range trade. What I usually do is look between the time of 8 to 8:05. So this was a successful conclusion at the 2p mark. And with the low volatility that we're seeing in the market right now, guys, I haven't seen below a one handle, and I just can't remember the last time I've seen this. Day trading the crude oil market now, I guess, going on 8 or 9 years at this point. I don't ever remember since I've been working this ADR ever seeing a handle below 1. So the way we set this up, though, is how I'm going to show you to how to control the trade. All right, so let's get into it and let's move to trade entry. As I'm recording this, it's 9:48 a.m. Central Standard Time. All right, so here's the trade setup. Here coming in at 8 a.m. And I don't know if you saw this, but what I put here was at 3:31 a.m. this was the highest blue bar, and at 6:50 a.m. this was the highest red bar coming into the trading session. So what I want is a bar higher than either one of these two in any color, any color, in either red or blue to make a decision upon which way I want to go. The bar that comes in, by the way, the bar that comes in at 8 o'clock at 1589. It becomes what I like to call highest volume bar, or RBV HVB. It's this bar right here. So if I grab my screen draw tool, this is the opening range between 8 to 8:05. This bar comes out, all three of these come out at 8 a.m. by the way, but this is the highest volume spike bar. You could add those together and get a higher volume bar since they're all basically within the same quick succession right through here. The entry point comes in right at the 8 mark, 8:05, excuse me. This is your entry right here at 52.17. It hits 1p. This was your stop loss on the trade up here at 27. So the way to trade, let me get rid of this right here and move this over just a little bit. The way to trade this particular trade is with two contracts is you have two at the stop loss right at 27, and you take one off at the 1p target. Now 1p target today was 52.06. So taking this off here at the 1p area allows you to hold this stop up here with no loss that's going to happen. So you have 12 ticks here, I guess. Is that 12, 17, and 6, 11? 11 ticks here, and you're risking 10. So net effect would be like a break-even trade if it would have come through here and then run you out of the stop here. All right, since the low volatility is here, you have to trade that second contract, but this gives you the ability to hold the trade. So you have one off and then the other sitting up here. So the pivot point is still in play at this time, right? We haven't had a retracement back to it. And then you see I put this line on the charts. This is that Gann signal that I talk about, the Gann fourth time through. I put this on the charts as I saw it happening right about here. No, excuse me, right here. This is where I put it on when I saw it. Usually you see it after the second or third recovery. Now I could move this a little bit. It's kind of one of those the art of trading things that you just finally start seeing. And what happens is in a down move, the market recovers. Think about that wave pattern that Ralph Elliott talks about, right? And then there's that ABC recovery. This is that part of the recovery of the trade, the ABC part of the wave. And it corresponds with Gann talking about the fourth time through. All right? So as you look at this, you have this one here. This could be considered 3 or 3 over here. and then you have your fourth time coming through and then running that 2p target. Now the CLPORT strategy, its target is normally 2p or lower, depending upon if you see volume figure. This volume right there was your exit point, and let's talk about why. So let's put a big question mark up here, right? Let me do that again. Let me put a big question mark up here. Why? Why are you exiting the trade on that bar? All right. Some of you guys know what I'm going to say. Some of you don't. This ends up being what I call RBV HVB. And you look on the blog post today, you'll see what I'm talking about, as I had some screenshots of some different things that I put together as far as this trade goes. All right. So what it stands for is red bar volume, highest volume bar. This becomes the highest volume bar of the trading session, and the significance is that it could be a turning point. And today you can see that turning point that went all the way back to pivot point here. So if you see the highest volume bar prior to you getting out of that 2p target, you would tighten up that stop and get as much profit as you could on the trade. All right, so as we look at today's trade itself on the CLPORT strategy, or the opening range trade, your first contract earned 11 ticks, and the second contract earned 24 ticks, making a net of 35 ticks, or $350 on one contract. And if you're trading 10, so 350, add that extra zero right there, trading 10, it's 3.5 or 3,500 if you were able to trade 10 contracts on this particular trade today. So it shows you the power of leverage in the market and taking on, you know, a good trading signal and then being able to take that to profit. All right. I hope this helps you in your understanding of how I look at the markets. This is Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. I'll see you on the next video that I put together. Bye for now.